Who's ready for the market update? How do you think Houston, Texas did in June? How do you think Texas did in June? How do you think Houston fared against the other large markets, right? What's y'all's pulse on the market right now? What do you guys feel? What do you guys hear? What do you guys think about the market right now? It's picking up. Someone said it's slowing down. I love this. What else? Yes, sir. Consolidation. What does that mean to you?
We're slowing down because we were like in the stock market is going up, and then it gets to a point where supply and demand kind of meets an equilibrium.
Supply and demand meeting equilibrium. Okay, yeah.
Pretty much what consolidation is: supply and demand meeting equilibrium, and then it will determine the direction from that. But I don't believe the market is going to tank. I think because the supply or the demand is so high right now, and interest rates are so high. Sellers are not willing to leave their house and then go pay for another house with a higher interest.
Absolutely. So it is a fascinating market that we are in right now. So 70% of the mortgage interest rates out there are 4% or under. Okay. If you look at the number of mortgage applications just over the last year, they've gone from here in March of 2022, right, and now we're in July, right, of 2022. They're down here, so they've taken a huge drop, and but the market has not tanked. Because of that. And a lot of people would have guessed that the market's going to tank, the real estate market specifically is going to tank, because we haven't in 40 plus years raised interest rate as quickly as we have raised them over the last year, right? So there were a lot of people who were calling for the market to fall. But what's happened instead is, you reference this term consolidation. And I think it is, I might change the term just a little and just say hibernation. Right? The reason why the market fell in 2008, 9, 10, and 11, we didn't have 70% of the houses' mortgage interest rates were at 8% or below. Now 70% are at 4% or below. And when people are looking at, in the last market cycle 15 years ago, when people are saying, what should I do? It's like, well, I could trade out of this high interest rate and stay at a high interest rate. Today in the market environment, people are saying, well, I could trade out of this low interest rate and go to this high interest rate, right? So what are people doing? I'm kind of calling it, you're calling it a consolidation. I'm saying the sellers are hibernating, which has actually been, for people who hold real estate like me, for people who are buying and selling real estate like me, it's been wonderful versus where we were in the market during the Great Recession, right? Where sellers had to get out of houses and they inflated the supply. So in 2010, we had a supply that was in some parts of Texas over 9 months of inventory. Today, we have a supply that's about 3 months of inventory. Now, it is more than doubled from 1.5, which is roughly what it was the same time last year. But because the supply of inventory is so low, people don't want to trade out of those low interest rate properties that they have. It's actually, from my perspective, as someone who buys and holds a lot of property and trades in and out of a lot of property, it's helped to stabilize a market in an environment that could have gone really sideways like it has in the past. So that's one thing that I've loved about this market. And, I think it really, at the end of the day, depends on your perspective. So, some people say the market's slowed down. Yeah, the market has slowed down a lot. I mean, the sales are down somewhere between 5 and 15+% year over year. And even towards the end of last year, sales were actually down 30%. But what is held remarkably constant in this reduction of sales is the sales price. Sales prices are down without a doubt, but they're not down as much as they could be, considering, right? So I would say, in 2008, 9, 10, 11, when sales prices were flat for basically 4 years, you would hear me saying over and over again, flat is the new up. Congratulations, especially versus like a market like California, what California saw in 2008, 9, 10, and 11, when sales prices were down 30%, right? In Texas, they're down a little bit, but pretty much flat. So in this environment, what we're seeing in many of the markets is prices are down. But considering that we've more than doubled interest rates in a 1-year period, the fact that overall in Texas, the average price is only down 1% year over year, I would challenge you guys in your perspective and challenge you guys to say, this is something that we should be celebrating. This is something that we should be celebrating. Now, I will say in a market where sales prices are down, though, it is incumbent upon us now more than ever to make sure we buy these properties right. Over the last few years, if you bought it wrong and if you made a ton of mistakes, guess what? You're still going to do okay, right? Why? Because if your strategy is, well, I'm going to wait for the market to save me, it's going to be quite painful, right? We right now, guys, are part of what I call the sandwich generation as real estate investors. Many of you guys are familiar with the sandwich generation as parents and children, right? Sandwich generation is you have parents, right, or grandparents living with you, and then you have kids that are living with you still that aren't launching in the way that, like when I was 17, I moved out of the house, right? It's like, that's just like normal, right? But kids these days are staying a lot longer than they used to. And they're kind of expensive, right? And then you're also taking care of parents. You guys are familiar with that, the sandwich generation? So the sandwich generation, you may not be familiar with this. Sandwich generation for real estate investors is we're getting pinched or squeezed by sellers who want the price that their house was worth a year ago. Okay? And we're getting pinched or squeezed by buyers who want what? A price that's commensurate with these much higher interest rates, right? So they want to lower. So we're getting kind of squeezed like this, and the mustard and the mayonnaise in the middle is labor prices are up, supply prices are up. So it is incumbent upon us as real estate investors, and any time, but especially when prices are flat or going down, that we have to buy the asset right. Because there's a saying in real estate, we make our money on the buy, right? We get our money, plus hopefully some profit, on the resell, assuming that we do everything right. You had a question or a comment?
Yes, okay, so is that the same kind of concept when you get a new build?
Is it the same kind of concept when you get a new build in terms of buying it right? Or, well, if you're buying a new build, my guess is you're buying it to hold as a rental property?
Yes.
Okay, so there is a book, I'm looking to my man in the back here, Morgan Housel, The Psychology of Money. Who's read that? Who's read that? That is a great book. Yes? Yes, you tell him. That is a great book. Get that book right now. The Psychology of Money by Morgan Housel. And one of the things that he talks about is know what game you are playing and know what game your competitors are playing. So the truth is that you can buy a house at full price, right? Not get a discount at all, as long as what? You hold it long enough and give it time to do its magic, which is appreciate in price. But if you're buying a house at full price, there's no way that you can, in a short period of time, playing the short game, right, which is the buy, fix, and flip game, be able to pay full price and then later sell it at full price after closing costs, property taxes, hard money payments, and then closing costs again when you go to buy it. So if you're buying it and holding it, you're good. But if you're buying and paying full price for anything, you're going to be in trouble unless, again, you hold it long enough to watch the market make its magic.
The only reason I'm saying that because I see a bunch of new builds, they dropping their prices.
The new builds have been dropping their prices. You know, what's interesting too is, I've got closed sales down 10% here. What's fascinating is we have a very divergent market. And I don't have the number memorized, and I apologize for that. But if you look at closed existing homes closed sales, they're down closer to 15%. If you look at new homes closed sales, they're actually up. Okay? Why is that? Do you know why that is? Because 70% of the people out there are wearing golden handcuffs. What are those golden handcuffs? The interest rates. Nobody wants to trade out of those existing houses because everyone refinanced in 2020, 2021, or the beginning of 2022. So there's actually a little bit of a reduced supply of some of those existing house active inventory, and the new builders are looking to, they're looking to make deals. In 2008, 9, 10, and 11, a lot of the new builders got in trouble because they were selling to investors, okay? And they were kind of selling to, I would say like phantom buyers. So buyers who were just going to immediately put the property back on the market. Well, when some of those phantom buyers or investor buyers started to fail, then it started to pull down these builder prices, right? So for the last 10 years, builders have been kind of strong-arming investors and basically saying, we don't want investors over here. So just in case you guys are wondering, investors, we're not a protected class, okay? They can discriminate fully against us, okay? I just want to let you know. So, but now, who are they trying to get back in to be able to absorb some of the inventory? That would be us, right? That would be the investors. So I would say, I know prices are down, but what I would challenge you on is you're not going to be able to buy it and sell it in 6 months for a profit. Now, could you buy it and sell it in 6 years for a profit? If that's the game you're playing, you will win at that game, right? So again, the psychology of money, Morgan Housel, one of the things he talks about is know what game you're playing and know what game your competitors are playing. And then the final book that I'm going to drop on you today before I stop I feel like I'm not a celebrity, person. Like I don't drop celebrities, but I drop authors' names like crazy. So Poor Charlie's Almanac. Okay, Warren Buffett, Charlie Munger. Poor Charlie's out. Who's read that book? Okay, a couple of you guys. That is a great book. And one of the things, he's got 10 rules in there, and one of the things that he talks about is compound interest, the most powerful force in the universe. And one of his rules is don't interrupt it unnecessarily. So, and they're proponents of, imagine your investments like a train ticket. And some of you guys in Houston, Texas, probably never been on a train. But people of you guys who live up north have been on a train, right? So you get so many punches on a train ticket, right? And he basically said, imagine each investment that you make on as one of the punches that you get on that train ticket. And again, one of the things he says is when you're buying some of these things and you're buying and holding, and that's primarily the Berkshire Hathaway strategy, to buy and hold for the long term and watch what? The value go up. So that's why he's saying don't be trading in and out of these investments unnecessarily, stopping that appreciation. So yes, you can buy a new house as long as you have the patience and financial wherewithal to be able to hold on to that while the market is flat or even down, right? And just if you listen, guys, if you bought a property at full price on the MLS 5 years ago, you're probably now between $100,000, $200,000, $300,000+ richer, right? What did you do? Were you some sort of an investing genius? No, you just held on to it long enough to make that magic happen. So yes, any investment can be a great investment as long as you hold on to it. So closed sales down 10% year over year. Pending sales, they are down versus where we were the same time last year. So as we close out July, we will probably see a reduction in those closed sales too. But I am just beside myself excited that even though sales volume has gone down 10%, that sales prices are still only down for all of Texas 1%. You guys should be too. Now, Austin is a little different story, so I'm going to go through the other major markets as well. So Austin, the average price, $611,000. The same time last year it was $650,000. So Austin sales prices are down about 8% year over year. Their closed sales are down 8.5% year over year. Their pending sales, they were actually, I've got the arrow wrong, but the pending sales are actually up in Austin. And the closest leading indicator to what closed sales will be next month are those pending sales. So it's quite possible that Austin will be the first market in Texas to have a positive year-over-year close sales, and that would be in the month of, as we close out July. And the Dallas-Fort Worth market, average price was down, but only down 3%. Close sales were down, but did pretty well as well, only down 4%. Pending sales, our closest leading indicator of what July will look like, also down 7%. If you guys are wondering, well, where's everybody going, right? Where are all these would-be buyers? Where are all these would-be sellers? Well, a lot of the would-be sellers are now accidental landlords, okay? The number of leases are up 26% year over year in the Dallas market. And the Houston market did really well. Average price $431,000, down, but only down 0.5%, which again, that's pretty much flat, and flat's the new up, considering again the fact that we've more than doubled interest rates over the course of last year. Closed sales down 13%, pending sales down 5%. Where has everyone gone? Leases in Houston are up 17% year over year, and that bottom number that I have, new lease listings, so they're also up 15% year over year. So this is would-be sellers that have said, prices are flat or down, I'm not getting what I want, I'll just lease it for a year. Again, watch that magic come back and happen for me. In the San Antonio market, sales price was flat year over year. Total number of sales down 9% year over year. Pending sales down 13%. Gosh, leases, that should be not flat up, but that should be up 17% year over year. And the lease price up as well. Guys, was that helpful for you guys in understanding where we are in the market right now? All right, wonderful. For two of you, I really gave some fantastic information, so that makes me feel really wonderful.